Good afternoon, everybody. Good afternoon, everybody, and welcome to your lunch break. You are listening to me, Ingu Stoffels, and yes, we apologize for the technical difficulties that we had with the previous, but we are currently live and we are ready to go. So we go live on YouTube from 12 to 1 p.m. every Thursday afternoon. So you can follow us, the Love Church CPT. We are on Facebook, we are on Instagram, we are on YouTube, we are on TikTok, and we are on Twitter. So we are the Love Church CPT, that's capital TLC, capital CPT. So last week we had our very first episode, and really we apologize, guys. We are still, fine tuning and finding our feet, but we are excited to be live with you today. Last week we spoke a little bit on social media, and we really touched on, many different aspects and many different sides of social media. We spoke about pros and cons of social media. We spoke about which social medias are more active, which ones are we more active on. We also spoke on how parents can actually protect or kind of, see what's happening behind the scenes of social media. So we did a lot of education on social media. We were actually here with a parent and a techie, which was Pastor Ashley Ardenser. We were here with him last week, and we just had an amazing chat. So this week, we are going to go into a very, I know this topic is a bit sensitive for some people, but that is what we like to do here on Lunch Break. We like to talk about topics that are real, topics that you might be struggling with, topics that you might want to know more on, because I know for today's topic, I'm someone who wants to know more, I'm someone who wants to learn, but also please note that any information contained in today's podcast is not intended, nor does it constitute financial, tax, legal, investment, or other advice. Before making any decision or taking any action regarding your finances, you should consult a qualified financial advisor. So today we are joined by Mr. Elroy Meyering. So Elroy is what one would call a finance and business strategist. He partners with businesses and business owners to grow their personal and professional business and financial affairs. With 20 years of experience in the field of finance and business, he has assisted many businesses by coaching and mentoring. He holds finance and business qualifications from various universities in the field of accounting, tax, and financial planning. His work-to-life balance includes the joys of listening to music, playing drums, watching sport, reading, and spending time with family. Now, after all of that, welcome. Welcome, Elroy. We are so happy to have you with us today.
Thank you for having me.
Yes, so after, I mentioned so many things over there. I mentioned accounting, tax, financial planning. Can you tell us what your area of specialization is?
Well, in the, every day, I deal mostly with businesses doing the accounting work. Not necessarily bookkeeping. There's actually a difference between bookkeeping and accounting.
Yes.
So I'm an accountant, and I see to financial statements, tax, and looking at tax planning most of the time every day. So that's basically what I do in a nutshell.
Because I think, when people hear finance, they just think of it as a whole. But you're going to break that down for us, that there are different kinds and different
there's
types.
different aspects, there's different things to look at. It's not just, accounting, tax. There's different aspects to it.
Okay, so before I get into the meaty questions, I'm going to start off. Can you tell us what a budget is? Maybe for those out there that might want to start trying or don't really know how to start. Like, what is a budget?
Well, you need to look at why do you need to do a budget. So there's different things that happen in your life, whether you're a business or just as an individual. And if you see that you have goals, you can actually put a budget together. So essentially what that budget is, it's a plan. It's you basically expressing yourself. So if you look at a canvas and how a painter paints this wonderful picture, the budget is basically an expression in monetary terms, basically putting down your goals, what you want to work towards? Is there something that you want to achieve? Some people do budgeting where it's basically your income and expenditure, where you're just seeing your income that you're earning and my expenses that I need to cover, that I have enough income to cover the expenses.
Okay, I see.
But then you also have those who form a budget where they need to plan ahead. So if you're wanting to buy a house, if you want to put down a deposit for a car maybe, or maybe you have kids and they want to go to university, and that's obviously a long-term kind of saving.
That is a different kind of budget.
So that is something that you can work towards, and it's basically one of these tools that you can put in place for yourself to plan for some things.
Okay, and would you say that finances differ for those that do have a budget in place and for those that maybe don't?
You know the saying, if you don't plan, you fail. Plan, you will fail.
You plan to fail.
Yes.
If you don't plan, you plan to fail.
Correct.
There we go.
So if you don't, if you want to achieve something and you don't plan it, like if I look at, say, a manufacturing company, they need to make bottles of water.
Yes.
And if they don't understand their demand, they won't be able to plan with it. Once they know their demand, they can actually put a plan in place. Say, right, I'm going to need to sell 10,000 bottles of water. Now let's plan towards it. So if you need to put down a deposit for a car, and 50,000 rand I need to put down as a deposit on this beautiful car.
Yeah.
Let's put it down as a plan. How am I going to actually achieve this goal?
Okay. And would you say that's something like emergency money? Because I've heard a lot of people speak about, saving, or once you have your budget, for example, if I look at myself, you have obviously your expenses, as you said, but then you also try and put some away just for that, just in case, you never know, something happens with your tire this month, you have money to go into, or anything can happen. So would you say that something like emergency money is a good thing to have, or is it just an unnecessary expense?
I think it's a very good thing to have. Before COVID, when the whole lockdown started in March 2020, there was this notion of, you should have at least 6 months worth of savings, in other words, to cover your expenses. So of course, if you had a budget where you know your expenses each month, you would know what that 6-month number is. But now when COVID happened, you could see that, the lockdowns, a lot of people lost jobs, salaries were cut. You maybe need to plan for longer, so maybe even 12 months, so that you know when that rainy day happens, you lose your job and you don't have any money to fall onto. That emergency money is something that will help you, because from experience in this country, also Cape Town, it takes on average about 6 months to find a job. So that is why that 6-month number.
So that's why it's made 6 months.
Yes, it takes on average 6 months. Some are luckier than others. Some it will even take a bit longer. But that 6-month mark, if something should happen and you need to find a new job for income, that income is there in your savings.
Okay. No, that's actually something very important for us to, look at. So if you maybe thought emergency money would have been an unnecessary expense, it could be something that you could fall back on in case of emergencies. So, for those that maybe started working and now they would like to be first-time homeowners, but they just really don't know where to start, because, I know, I don't know of the process, but for those that don't know where to start with finances, because I heard you have to be approved for things and things, but where should they start if their goal is to be a first-time homeowner?
I think the first step is, are you actually actively looking for a place? As we speak, if you look at the property and you see that's the property I want, you need to start speaking it. And the other side of it, when we come to the natural side of things, one of the key things that has to be done is your assessment, your affordability assessment. Are you able to afford that bond? And I've seen many applications fail because that financial, that affordability assessment is not completed quickly. So sometimes, let's say you're renting at the moment and you want to buy a house, I've seen many times how that financial affordability assessment as your rental expense in it, which is something that should actually be excluded because that's going to be replaced by your bond repayment.
Okay.
So having that expense in there will show a low affordability or almost no affordability because of how it's been completed. It's been completed incorrectly.
Yes.
So there needs to be a bit of tact in how it's been completed. So that's very important. But if you have a good bond originator, they would be able to help you. And I always believe it's good to have a bond originator to look at which banks can actually give you the best rate for the house that you want to buy. Because if you, let's say you're banking with XYZ and you just
I was going to say, are you going to say names?
no,
I need to do another disclaimer.
No names. You go to bank XYZ, they will give you their rate, and you're going only to them. But all the work that you have to do to go to XYZ, ABC, KFC, it's a lot of work. Whereas a bond originator does that, and they get paid to do it. So that's always something to consider.
So for those first-time homeowners, if you are listening, these are some really good points to take down, because I know sometimes you have a goal in mind, but you don't know where to start or where your starting point is at. And for those that maybe have started working and are now earning income, is there anything that you would, is there anything that you have maybe learned that you wished you had done earlier or started doing as soon as you started working?
So you're obviously asking about someone who's, let's say, they're fresh out of school or even fresh out of university and they just started working, so it's a young person.
Yes.
Obviously things are a bit different for the younger folk. So if you're starting to work, I always say, if I look back at my days, one thing I would have done was start a retirement annuity. Because you only have so many years to work before you retire.
Yes.
And before you know it, you don't start when you need to start at an early age. That time gap is going to close. And before you know it, the kind of income that you want when you retire, call it 60, 65 and some even 70, you have so little time to save towards that capital that you need to be able to give you an income. Because remember, if you retire at 60, you're going to need income for at least another 30 years.
Yes.
Assuming that you're going to live another 30 years after retirement.
Yes. And that's something like, you look how young you are and you think, I'm not going to worry about it now.
Yes. And why I say retirement annuity, what's nice about it is that any returns that you earn on the investment, because a retirement annuity is an investment, type of investment, it is tax free, and also it's tax deductible, the contributions that you make.
Yes.
So that can reduce the tax that you pay on an annual basis.
Okay.
And I've done a calculation before where if you don't start now and you start, let's say, 5 years later, you actually need to double what you need to contribute towards your retirement for the goal that you want. Here again, it comes down to goals, because you have that retirement age of 60, for example, and let's say you want 30,000 rand per month at that time, in today's money. In today's money. I'm not bringing inflation into account. At 30,000 rand today, let's say today you're 60 years old and you need 30,000 rand per month, and every year you want that to increase, let's say about 7% or 10%. You're going to need quite a bit of income.
Yes, true.
So the sooner you start, the better it is. The other nice thing about it is that, and some people may see it as a bad thing, the money that you contribute towards a retirement annuity, it's actually tied up until your retirement age.
Now that I see as a good thing, because if I can access it, and just speaking from my own personal self now, if I know I can just fill out the form and the money will be paid out, no, it's good that it's tied up.
It gives that kind of discipline.
Yes.
So not many are quite happy in putting money into a retirement annuity, mainly because of that reason.
Yes.
So the other type of product that there is would be like a tax-free savings account, where the money is available and your returns are tax-free. And it's a way of government, when they implemented this tax-free savings, it's a way of improving savings, because South Africans don't know about saving. They like to spend. So, so that's another vehicle. But yes, to actually come to the decision of what is the best thing for you, the financial advisor will be able to.
Yes, they will be able to direct you and to guide you.
Yes.
So that was actually my next question, like, is contributing towards the retirement fund investing? But now you've said yes, it is a form of investment. And what is the best approach to how one should invest?
So when you invest, you actually need to look at, again, what are your goals?
Yes.
And investing could be a form of saving, but it's not saving. Because when you save money, there's no risk. When you invest, you're actually assuming some risk.
Yes, true.
And that's a very important aspect to consider. So what risk are you willing to take? And how I like to look at the risk is, what is your time frame? When do you need the funds? And when you need the funds will determine what kind of risk you can take.
True.
So if you need the funds, let's say in the short, maybe even medium term, you can't afford to take that much risk. So the risk that we are talking about here is the risk of losing from the capital that you're putting in with your contributions. And you can't afford to take that risk, to take losses on funds that you need in the short term. Whereas in the long term, you can afford to take a bit of risk because over time the market recovers. So if you look at how the graphs, I'm sure you've seen the graphs.
Yes, I've seen it.
Especially on unit trust portfolios, they will show you how the price of the units go
like
up and down.
the market,
Yes. So the up and down is basically when the market goes down and up. So, and one of the mistakes that people make is when the market is down, that's when they panic. Now this is again another topic of behavioral finance. Is when the market is down, there's like panic mode, stress. I'm going to pull my money out. That's the first thing that comes to mind.
Yes.
But
rather keep what I have.
Actually, a lot of people will actually just extract all their funds when they're in a panic mode.
Yes.
But that is actually, I always say that's the best time to rather stay, bite the bullet, because that is where you will actually make more money later on. Because when that market recovers, and I can just explain very quickly. When you invest in a unit trust, you're buying units at a specific price. So when the market goes down, those prices are lower, and with the capital that you built up, you can actually start buying more units at a lower price. And when the market goes up again, the price of those units increase. So the more units you have, the better surrender value of your investment will be.
Speaking units, we're not speaking about electricity. We're speaking about something else over here.
Yes. So the time frame is very important to consider, because that will determine your risk. And like I say, the longer term that you need the funds, like for example, retirement annuity, if you're starting young. I myself, I'm young. My retirement annuity is aggressive. It's invested in aggressive type of funds. But as soon as I reach, like, let's say 5-6 years before retirement, I can actually switch my risk to maybe going a bit more moderate, moderately conservative,
because you will need
I'm close to
Yes.
Exactly.
Okay, I understand. So timing plays a very important role on this whole higher risk, higher reward thing. So is planning your investments part of financial planning? If we look at financial planning as a whole, is like planning your investments part of it?
Yes. So my take on financial planning, I look at two aspects. One is wealth protection, and one is wealth creation. So investments would be more of the wealth creation side of things. So that is where you're planning for retirement, which is your pension is part of that. Certain other goals that you have, like education planning for your kids when they go to university, because I must say university is expensive. 5-6 years ago, even 7 years ago, when I looked at UCT, it was on average about, depending on what you're studying, about 60,000, 50,000 rand per year in the first year. And I've actually taken inflation into account. Education inflation is actually higher than CPI, the Consumer Price Index.
Okay.
You look at about 10-11%. That's the price of education every year, how much it's going up. And if I actually compound that from 7 years ago to when my kids must go to university,
Yeah.
it's very expensive. So,
Yes.
so education planning, that all forms part of wealth creation. The wealth protection side is something different, and that's when, of course, you are protecting your wealth.
Yes, because that is actually what I wanted to ask. You spoke on wealth creation and protection. And if we can just get a little more insight on wealth and protection,
Yes.
wealth protection.
Yes. So, some of the viewers maybe, or listeners will maybe thinking, I just have a 9-to-5 job, earning income, you maybe just renting, you don't have any assets, and you're thinking that, what wealth? You're asking yourself, what wealth?
Yeah.
But your salary is actually part of your wealth. And I'm going to articulate what I'm saying around that. But wealth protection is about protecting your wealth, different aspects of your wealth. So your salary, like I say, is part of your wealth. You can actually protect your salary. So should you be in a position not to work, being it because you are disabled, impaired, and there is a difference between disabled and impaired.
Okay.
Okay.
Keeping that question in the...
And or maybe you've been retrenched
Mm.
and that income is no longer there. So you can protect your income, your monthly income, and in the event of those events happening,
Yes.
you can actually call on those little tools that you put in place
Okay.
to tap into those for your income.
Yes.
That's on the income side. Then there's of course the capital side, which is things like your life cover. So in the event of death,
Spouses.
I would rather say, if you look at it from like yourself and your husband, let's say your husband passes on, for example, and you need his income in your household to survive. So then the question I would ask you is, that income, if he passes on, who's going to give you that income? And for how long do you actually need that income? So maybe you take let's say it is annual salary, and you're multiplying that by the number of years that you need it. So let's say you say 20 years, 100,000 rand a year, 20 years, you need 2 million rands worth of life cover. That 2 million rand will give you your monthly income in the event of his death, to be able to sustain yourself, as an example. But life cover is also used to cover debt in your estate, like executors' fees, because the executor must wind up your estate. Maybe, they say one thing is for sure, when you die, it's death and taxes, right? When it comes to tax, you still pay tax when you die. Life cover can solve that problem. Let's say you have a bond on your property. The life cover can sort out your bond. Imagine you had a bond and your husband passes. Who's going to... The bank still looks at your affordability.
Yes.
And I've seen so many people where the bank had to repossess because there wasn't sufficient income after the death.
Yes, because I think I didn't quite have an understanding when you said life cover. Because I heard you said, if your spouse passes away, so then life covers for you to be sorted, but no, it's actually so that the death of
So it's for you to have your income, because his income is no longer coming in.
Yes.
He's not working because he's no longer around. So you can actually invest that 2 million that I gave you as an example. And out of that investment you can get a monthly income. Plus that 2 million rand grows. So it can last you a little bit longer than your 20 years. It's just a bit of tact that you're using, a smarter way of dealing with a lump sum that you receive. So it's the income that is replaced and to cover the debt. So you can have enough to cover income plus debt, so that when it comes to that point where your spouse passes on, you can cover the debt and have your income. You don't have to worry about paying the credit card, the loans, bonds, etc.
Sure. And I think many of us, or some of the viewers might not even know that is possible, or what is expected after death. Because sometimes we don't want to think about, we like to say, no, don't say it, don't speak it. But it's not speaking it, it's just kind of also, prepping for what comes after. And is there any other? Okay, let me put it like this: what do we need to be mindful of other than risk? Because I know we all know about risk when it comes to investments. What is it that we need to be mindful of?
Again, it comes down to what are your goals.
Mm.
Always be mindful of your goals.
Yes.
The other thing is on the other risk that you are left with is, as I mentioned earlier, something called inflation.
Mm.
And inflation is essentially, what percentage is the price of goods and services going up by every year. So I normally use a figure of 8%. It may still be lower because CPI, Consumer Price Index, is like this basket where they put in the different goods and services in the industry.
Yes.
But I don't believe that everything has been accounted for. That's why I just increase it slightly so that we are safe.
Yes.
Now, when you invest, it's fine to say that yes, I'm receiving 4-5% interest on my investment per annum, and you can be happy with
per
it.
year, right?
That's per year, yes.
Per annum per
So,
year.
so if you're receiving a return of 5%, but let's say inflation is at 7%, so you're paying more for goods every year at 7%, but your returns are at 5%. You're actually making a loss on your investment
Yes,
of
yes,
2%.
I see. Okay.
So, in my mind, when I look at an investment, I would want to see that, firstly, can I get returns higher than inflation? And also what are the tax implications? Because the returns, you have to pay tax on the returns.
Yeah.
And that's where a tax-free investment comes in handy. Because all the returns are tax-free.
So we spoke a lot of things, pertaining to investments and also many things that we might not have understood or not knowing where to start in the financial world. And I want to get to a less finance question and just ask, for someone out there that is maybe looking to pursue a career in finance, do you have any word of advice for them or anything you'd like to encourage them with, if they're thinking, I want to go into finance as a career?
The finance industry is it's so wide. There's so many things that you can do. Like as I mentioned, there's accounting, there's even tax. And accounting is actually split into different things as well. You get forensic accounting, you get management accounting, you get financial accounting. So I do mostly financial accounting.
Okay.
And you get auditing as well, and then you get forensic auditing, and so many different
avenues.
Things, yeah. You get financial planning as well, which we've actually touched more on financial planning today than the accounting and tax side of things. And financial planning as well, it's so vast what you learn.
Yes.
And the opportunities that's out there, it's just the sky's the limit. Once you hit those top professions or qualifications rather, in the different aspects of finance, the sky is the limit. Of course, when it comes to accounting, being a chartered accountant is like pinnacle. That's where you would want to be, because that's the top tier
of reach the sky
of the profession. Then when it comes to financial planning, you're looking at a certified financial planner, where you actually have a postgrad in financial planning.
Okay.
And then on the tax side of things, you'll find that a lot of tax specialists are chartered accountants. But you also find non-chartered accountants who are tax specialists.
Yes.
And then on the other side of just the numbers, you also have financial information systems, which is like more programming.
I was going to say, that sounds like IT.
Related to finance, which is also a very exciting area to learn.
Yes. So finance is a very broad, because when we hear finance, we just think accountant.
There are jobs out there where even just for a general manager position, they're looking for CAs.
Sure.
Even just for a CEO position, for example, CA. Not even just for the finance jobs. They're looking for CAs. CAs, like as I mentioned, you're master at financial accounting, management accounting, auditing, and tax. But a lot of chartered accountants, you'll find that they would choose to specialize maybe just in financial accounting, or they don't want to do auditing.
Yes. Okay.
You know,
Then they also
so-
have their preferences.
but
maybe.
once you're there, you can make that decision.
Yes.
That's pretty well.
Sure.
But I must say that, the advice I would give, around your career choice, you actually need to make that while you're in high school already.
Yes.
Because I can remember when I was in high school, at that time it was still standard 6,
Standards.
standard 7, still the standards. It was only when I went to standard 9 and it started to change to grade 11 and grade 12.
Okay, I see.
So, we could choose our subjects. And the last 3 years of high school, you would have your 6 subjects.
Yes.
And from standard 6, I started doing, which is grade 8, I started doing accounting. And I loved it since then. And whenever I chose my subject in grade 9, and in grade 10, I changed my subjects. I chose my subjects which matched the commerce industry.
Okay.
So I decided from then on already, so that when I'm out of school, it's a good stepping stone to my studies. So making that career choice is very important. You actually need to own it. While
And you
you're in
need
high
to
school.
know that you're passionate about it, or else you're
Yes.
not going to enjoy it.
Doing a job just for the money,
Not going to work.
it makes nobody happy.
Mm.
Yes, you get all the money that you want,
Yeah.
but are you really fulfilled and content with
Yes.
earning the money as well as doing the work?
Yeah.
So making that decision in high school will help when you apply at university to study, and save money, because you don't want to go to university and you're studying the wrong thing.
Sure. Imagine.
Yes.
Imagine. Oh, 4 years?
3, 4, 5
3,
years.
4 years, and then you're like, this isn't where I want to
Yes.
be.
Yeah.
Thank you so much, Aldo, for speaking to us today, and
Welcome.
just for kind of not teaching us, but elaborating on a couple of things for us, when it comes to financial planning, because I think it's really needed for us to
Yes.
hear that, because I don't know why, but we are scared of asking about finances or speaking about our
It's a
finances.
sensitive topic.
It's a sensitive topic, but also just please note that any information spoken about in today's podcast, it is not intended, nor does it constitute financial, tax, legal, investment, or other advice. Before you make any decision or taking any action regarding your finances, you should consult a qualified financial advisor. Thank you guys so much for tuning in today. And before we go, I just want to share and say that now you've got some knowledge on the topic, and you've got some tools on the topic. And it's easy to say, pray about my finances, do this about my finances, do that about my finances. But the word says faith without works is dead. So now that you got the tools, put in the works and God will do the rest. We'll see you guys next week, Thursday, 12 p.m. Yeah, I saw, yeah.
Cool.
Yeah, it's good.
Nice, nice.
Good enough.
It's good. That was your
Mind blowing.
intro. You must send me the answers. No, that was good.
Yeah, I was gonna ask you about. You were talking about. I didn't hear if she asked you if you were talking about in the case of death
Yes.
and the finances, then or having a life insurance
Yes.
that will help your spouse. And if you and so obviously the death then comes to the spouse if you're married.
Yes.
In
Yeah, that's
that's
very technical. I wouldn't discuss that here.
okay.
But you want to know for your purposes.
Yeah. So if you have an ANC, what would be the
Yeah, ANC, what accrual that
was?
well, then the accrual calculation needs to be done at the date of death. So what's taken into account is your values at the start of your marriage, what you've built up in your marriage,
Okay.
and then the calculation is done.
Calculation, yeah.
Because it's almost as if you're halfway income property,
Yeah.
halfway out
Yeah.
because of the accrual contract.
Okay.
So there is an accrual calculation that must be done.
Hmm.
So there's certain assets and liabilities that will be taken into account.